So, my dear children, we are here with the continuation of the same chapter, basic accounting terms. So, here we will be dealing with that is the assets and its classification, because in the previous class we have discussed already about, or in the previous video we discussed already about the assets and its classification. So now let's get into detail, that is what is the classification of the assets basically mean. So this is the part 2 of the video, so let's continue here. Now see children, we have discussed we can classify the assets broadly into the two categories. One is non-current assets and the another one is current assets. So we have seen it here. Non-current assets basically mean they are those assets which are intended for the purpose of staying in the business for a longer duration. Means these assets, they exist in the business for a longer duration, that is more than a year. They are not frequently sold out, and generally these assets, they increases the earning capacity of the business. For example, we can take land and building, furniture, fixtures, machinery. These all are the examples of the non-current assets. As you all know, this non-current assets can be divided into even more categories. So we have kept the number of the categories according to the syllabus. We have limited the number of the category according to the class 11 syllabus. So we are going to discuss the classification accordingly. So, as you know that non-current assets, as we have seen in the previous video, can be classified in the further categories. That is, the first one is fixed assets. Fixed assets can be divided into two more categories. The one is, you can say that, tangible assets, and the another one is intangible assets. Now let's see what does this fixed assets basically mean and its further classification. So fixed assets basically mean they are those assets generally which are not frequently sold off, and generally they increases the earning capacity of the business. These fixed assets can be classified as fixed intangible assets and fixed intangible assets. The example of the fixed assets is also the same to that of the non-current assets, and it will be also be the same to that of the tangible assets, that is land and building, furniture and fittings, fixtures and machinery, equipments. These are some examples of the fixed assets. Now the next category under the classification of the fixed assets which we are going to discuss is the tangible assets. Children, the meaning of the tangible basically means something which has physical existence, or something which can be seen or which can be touched is referred to as the tangible assets. So here the meaning is they are those assets which have a physical existence and can be seen or touched. These assets can also be called as fixed tangible assets. For example, land and building, plant and machinery, furniture and fittings or fixtures, tools, equipments, automobiles, vehicle, computer, and some gadgets too can be called as the tangible assets. So this tangible assets can also be called as the fixed tangible assets. So don't get confused with the examples. The examples of the tangible assets will be the same example for the fixed assets, as well as it will remain the same for the non-current assets as well. Now the next here, the second classification, after that we will be discussing, but let's deal here with some examples like furniture and fixtures. Okay, children, fixtures basically stands for the parts of the furniture, or the that is attachments of the furniture, or its paraphernalia is basically called as the fixtures. And land and buildings is also, that is the fixed asset or the tangible assets, we can say. Similarly, the vehicles, equipments, plant and machinery can also be referred to here as the tangible or the fixed assets. Plant in accounting terms basically mean any industrial unit which is engaged in the process of production or where the production is carried out is what we call as plant in accounting terms. Now, the next after that, the type of an asset as a classification of the fixed asset, which we are going to deal here is intangible assets. So, intangible assets basically mean they are those assets generally which don't have physical existence. The term intangible is contrary to that of the tangible. It carries opposite meaning to that of the tangible assets. So intangible means something which cannot be seen, something which cannot be touched. Same here is the meaning for it. It refers to those assets which don't have physical existence and can't be seen or touched, but its presence can be felt through the benefit which it gives to the business. So children, basically what does this intangible assets basically means? They are those assets which we cannot see, which we cannot touch, but they are very important for the business because we can feel its presence and its presence can be felt. And you can say that suppose intangible assets are not there, so we can say the business won't be able to continue further. So some examples of the intangible assets which we are going to deal here is goodwill, patents, copyrights, franchisee and licenses, computer software, intellectual property rights, trademarks. These are general examples of the intangible assets. Out of that, according to the present need, let's discuss the few things. The first example here is goodwill. Goodwill basically mean the good reputation of the firm, the name and fame of the firm. You know that how a name and fame is important for the business. No business can survive in the absence of name and fame. The name and fame or the goodwill of the business is complementary to the growth and expansion of the business. The more name and fame and the goodwill, the more will be the growth, expansion, and the profit of the business will be. Hence, though this goodwill can't be seen, it is not visible, but still we can feel its presence. Similarly, the next is patents. Patents basically stands for the inventions and discoveries which are registered with that of the codes. So therefore, no one can copy it or no one can imitate it. So this is what we call it as patents. Same as that of the copyrights. The detailed part of the franchisee and license we will be dealing in the coming chapters. So it will be more clear to you then. The next here it comes is computer software. You know children, the software is a thing which makes the computer hardware functioning or which makes the hardware of the computer active. Hence the software is an intangible aspect. It's an intangible aspect generally which is designed by the brain. But the hardware is a tangible aspect which comes into life or which start functioning when the software is implemented on it or when the software is installed on it. So similarly, the next example is also the same, that is intellectual property rights as well as the trademarks. So we discussed about the two classification of the assets and the third and the last category of the assets which we are going to discuss here is fictitious assets. So the term fictitious basically means something which is not real and something which is unrealistic is referred here as fictitious. So children, let's see how can we correlate the term fictitious with that of the assets. This is the next thing we are going to discuss here. So fictitious assets basically, it refers to those unreal assets which cannot be seen and cannot be realized in cash. It generally includes one-time heavy expenses which cannot be claimed from profit and lump sum. Rather, it's spread out over a number of years. So this fictitious basically means they are those unreal assets. They are those generally an unrealistic type of an assets which we cannot realize, or out of which we cannot generate the cash. Okay, but these expenses are very valuable for the firm during the time when it was incurred, not in the coming times. So mostly these assets are in the form of an expenses, generally which cannot be compensated with one single year's profit in lump sum. That's the reason it is being spread out. So this assets, as it's been just claimed out of the profit, and this process of claiming out of the profit is called as amortization or written off. So let's understand this concept even more in detail, because you will be confused with this fact. Like the teacher is saying, though it's an expenses, and how this expenses can be correlated to that of the assets. So let's deal it even more detail of this through an example. So some examples of the fictitious assets are the preliminary expenses, deferred revenue expenditure, discount of issue of debentures, underwriting commission. Children, even these terms which you are right now presently seeing in the screen, you may feel being very complicated. All these things will be clear to you like in the coming days when you will be dealing with the content. But presently let's pick up the number one example, that is of the preliminary expenses, in order to understand the meaning of fictitious assets perfectly and properly. So let's understand what is this preliminary expenses basically mean. Preliminary expenses are those expenses generally which is incurred by the company for the purpose of its initiation or for the purpose of starting the business. Means any initial investment which is being done by the promoter or the owner of business into it, so therefore the business can be started, is what we call it as preliminary expenses. This preliminary expenses generally for any company is a heavy expenses. The initial investment is generally meant a heavy expenses for any particular company, and it is not expected that within a year or within a year's earning the firm will be able to compensate these expenses, or it can be neutralized. So let us understand it better through one example. Suppose Mr. Shah wants to start up a business. Let's assume he needs an investment worth rupees 20 lakhs to start up a business. And it is expected that this business is going to give him a yield of rupees 5 lakh per annum, or more than, it can be either of the way. So the normal course of the business continues and he earns the profit as well as it was expected, 5 lakh in a year, in the first year. So do you think that just earning a 5 lakh of the profit, through that the whole 20 lakhs can be compensated it? No, only you can say that out of the 20 lakhs, just we are able to cover up only 5 lakhs. Remaining 15 lakhs still remains. So children, if we will see through this way, it will take a business of such similar nature to cover up its initial investment. That is at least a time duration of 4 years it will take. Means a business will take 4 years span of a time in order to cover up with its initial expenses. So therefore this whole entire expenses we cannot expect it we cannot expect this that it can be adjusted from a single year's profit. This is the reason it is divided into coming years. So if I say 4 years, it means first year's 5 lakhs profit, second year's 5 lakhs profit, third year's 5 lakhs profit, and fourth year's 5 lakhs profit. In such a way we can see in 4 years this 20 lakhs amount can be covered up. It can be compensated. Hence, the profit from the 6th year is the original profit which the business can have. So this way, or this is how this type of the expenses are adjusted. So these type of the expenses are referred to as fictitious assets because they don't exist but we need to show it in the balance sheet because they reduces the value of the profit. In accounting terminology, these fictitious assets, the part of which is to be adjusted in the profit and loss account is debited in the profit and loss. When we prepare a profit and loss account, it means it is written off. A part of fictitious assets, if it is shown in the debit of the profit and loss, means that particular part is written off or it has been adjusted with that profit in that particular year. And this process of adjusting these fictitious assets out of the profit and loss account is called as amortization or written off. I hope so the meaning is clear to you, isn't it? Like how we can call these type of an expenses, though being very important for the business, it can be called as a fictitious assets. Till the time they are there in the business, am I right? They are just adjusted in the coming year's profit. So that's how we are treating the fictitious assets in the books of accounts. Now, children, after this, the next topic which we are going to deal here is liabilities. We have seen assets, we have seen its classification, and now the next we are going to discuss about liabilities. Liabilities are also equally important for any business organization as that of assets. So let's see what does liabilities basically mean. Liabilities are the responsibilities of the business. We can say the liabilities are the duties, obligation of any business or of any individual which it owes to outsider is what we can call it as liabilities. In simple way, if I'll say, or in layman term, liabilities can be called as burden. Liabilities can be called as burden on anybody or any business organization till the time we fulfills it. So let's see here, what does liability mean? It refers to the state of being responsible for something or for anybody. In other words, liability is the amount which the firm owes to outsiders. If we have taken a loan from the bank, till the time we are not repaying the amount, we are liable to the bank. So the borrowings, debts is also a type of a loan, isn't it? We can say debts is a synonym which we can use it for the loan. And any of the expenses payable means any of the expenses which are due to be paid but till now we haven't paid, these things can be called here as liabilities. Hence we can say, like that of an asset, this liabilities can also be classified into many categories. These are some general examples of liabilities. When we will be dealing with the classification of liabilities, you can find even more examples according to the nature of its classification. But this is a random example of the liability. If you're taking a car loan, if you're taking a house loan, or if you're taking any loan to purchase anything, all are called as liabilities for the firm. So, children, the next video we will be discussing about the classification of the liabilities and its types and its examples and even more further topics relating to this very particular chapter. Till then, stay tuned for the coming videos relating to this very particular topic. So, thanks for watching this video. Any doubts or any queries if it is there, so you can contact me through WhatsApp or we can discuss it in the online class. Go through these videos. So if any concepts are unclear, better be in touch with me for further clarity. Thank you once again.